Hello, you're watching Man Over Market. This is a live trading session on Wednesday, March 4th, 2015. It's 10 a.m. Central Standard Time. Lewis Borsellino, author of The Day Trader, From the Pit to the PC, will be sharing charts and proprietary indicators during this session. During the live broadcast, we'll be watching for your comments and questions in the comment section of the YouTube video, as well as on Twitter, where our handle is @ManOverMarket. If you're watching this broadcast live, please know that there's a slight video transmission delay and about 30 seconds. Also, Man Over Market presents this information with this disclaimer. Trading futures, options on futures, and retail off-exchange foreign currency transactions involve substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or most of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not indicative of future results. The following information is an expression of our opinions and is provided for educational purposes only. And now, here's Lewis Borsellino.
All right, good morning. We got what we want. We got some action this morning. The market's down about 1350. We're showing you right here the profile. All right, got a little wedge here now between 92.25 and 2088.25. Remember, we had a down bias. We've been going straight down. And oil is on its butt. You know, and I can't believe that oil minister came out today and said that they're going to keep producing oil. Market rallied with that. So I'm looking right here. We got both ends of the profile, as far as I'm concerned, unfinished. And I think the tail of the tape is going to be if we get above 92.25. All right, up in here, I think the market will go fill in at the top for a little while. And then if we take out this 88.25, I think we'll go after the lows. So we're right now we're in a little bit of a consolidation. We've got to wait for this to take off to make up its mind. Here's our 5-minute chart. Let me make this a little smaller, bring some things into play. So we're consolidating right in this area right here. Here's the 92.5 area I'm talking about. If we get above that, I think then we'll make a run back up to the opening range. So I think the market's taking a breath here. 91 right now is basically about 300 points from the low, which is our average rotation. What's the average rotation? 3.75 or 300? 3.75. So I think the market right here is trying to make up its mind. Here's that 1-minute cash chart. Take a look at it. It's back up in this area. So that's where we're at. I mean, to quote one of my famous clerks, he said, the market could either go up or down from here. And I looked at him and said, that's probably the most brilliant thing that someone's ever said to me. So little consolidation. I think we got oil down at 49.76. And so that's what I'm looking for right here, to see how we react in this area. Above 92.25, and how we react. Well, actually around 92.5 is what we're really looking at, because those are these highs right here. See these highs? Let me make this bigger. All right. That's what we're looking at. Let me bring in Bookmap, see what these guys are doing. So we got a bunch of orders up here between 93.5, right? That's what we're looking at there. So it's kind of slowed down a little bit based on, you know, we kind of sold off right from the opening. Whoops, sorry. There we go. CCI has crossed the center line, trying to go back up here in this area. Okay, so this is what we're looking at. Is this, you know, it's still red. We got a little temporary upturn right here in our short-term moving average. Okay. We're testing this here. Let's see if it fails up here. Let me move this up so we can see it better. Okay. Still got red. If you're short, you know they're not going to make it easy for you to stay in them. They're going to, you know, test it as part of the range. And that's about it for right. I mean, I hope we get some action here so we can see what's going on. We've had some action this morning. I think we're going to have to wait for about 15 minutes. And if this bracket E, started here and has been moving up. If it doesn't take out this area here, I think that the second 15 minutes will be down and we'll go for the lows. So that's what I'm waiting for. CCI is moving up. We crossed the center line. This is getting to the, you know, the first level that would be overbought at this point. You got any questions out there? Get them out now. I think we're slowed down a little bit. So we got, let me see here. It looks like 1, 2, 3. Working on our fourth top up here at 92 and a quarter. 92 and a quarter. Any questions?
Do you have any trades on currently, they want to know?
I don't talk about my trades, guys. Sorry. This is an education thing. If I can't really talk about my trades. We're not registered. I'm just telling you what I think of what happens at different levels of the markets.
Do you offer a TOS link to the overbought study you are using on the bottom of your chart?
Not right now. In fact, this is ours. I've been telling everybody, you know, for a while now that this is our proprietary stuff, and that it's there's some off the book stuff that we took out of other indicators, but we've kind of reprogrammed it for our use. All right, well, we've gone through that area. I'm looking for this market to move back up in the here. That should be like 94.5 and so on.
Where's the 5-minute pivot at?
5-minute pivot is at 2097.89 right here. You see it? 2097.89. All right, we took out these tops. Like I said, they're not going to make it. So let me think now. That'd be 3. So if we go 2 rotations, you're looking at like 20.96 half. That'd be a good stop up in that area.
With today's negative bias and the market opening lower, how do you enter position on the opening, or do you usually wait for pullbacks?
Well, I like to wait for a pullback because remember that the bias gives you a 70% chance that the market. This is a little 1-minute chart that I've been using, something I've been looking at now, and those were those levels I was telling you about, 92 and a quarter and 9 and on the bottom. So I wait for theoretically anything above the opening, you look for a spot to sell it because the bias is telling us that there's a 70% chance that the market is going to finish lower than where it opened, lower than when it opened. So that's how I look at that. I like to look at, and then here we're going to take a look at this. Let me open this up a little more for you. Oh, we've had some consolidation down here, okay? And now I'm looking, we're going 1, 2, 3. Let's see what we do with this one. If this is a lower close, a higher open close, I'm sorry. Let's see what this bar does, okay? Because usually when you get this sort of action, they're gonna get up to an exhaustion spot. Let's take a look what's going on with the other ones too. Let's see what's going on. It looks like the Russell has taken out its 5-minute pivot, and the NASDAQ is working on taking out the 5-minute pivot. So here, let me bring this down. Here's the NASDAQ. Here's the 5-minute pivot. Here's their CCI. All right. We'll know in about 3 minutes if it takes it out. Dow is sort of like the S&P's lagging below. Here's the Russell. It took out the 5-minute pivot. I'm glad we're doing this stuff because you guys made me start looking up at the top up there. So I keep my charts all organized, different screens. I have 4 monitors here. Sometimes it's hard to keep a count on all of them. So let's see what happens here. We got this is an exhaustion dot, which means usually means that it could be a turnaround. And then we got 1, 2, 3. Let's see if we get a higher close on this bar here, and see if we can get back inside. So right here, 94.5 is the low of the first 5-minute bar. The low of the first 5-minute bar. Looks like there's some people there who want to sell it. Here's 94, 94.5, 95, 96.5 is what I was talking about. Be 2 rotations, big order up there, 1,300 contracts. Not much going on the bottom. So even though I have this negative bias on the day, and you've had oil getting killed and so on, they are never going to let you get the market the way you want it to go. It's not sometimes you put the trades on, and sometimes they go exactly your way. So looking at what we're right now here, I think they're still working on their retracement. Doesn't mean that the market can't turn around. I've been using. Let me look at that again. Yeah. So let's see if it gets down to 92 and a quarter again, let's see if they use that as support to keep this thing going this way. There's that 1-minute cash that I look at, and this is a 1-minute chart for S&Ps.
Love the rotation levels. Like to hear more about what's behind them.
The rotations it's easy. It's just it's the average rotation of the volatility, and the Inside Edge software does it for me. All I have to do is put on a different chart on it. I'm going to make a different chart for you so that we can show you how we look at it, because there's Inside Edge. Here we go. 4.5 is going to be key. We can get above 4.5. All right. We're testing the bottom here. Then we got 97 as the top of the range. And our opening print today, you know, these are the kind of things that keep you out of trouble. You know, when you look at this CCI, it's getting up here. It's kind of leveling off. It's not like it's turning around here. Kind of leveling off. And, you know, like everything else, they're going to shake out the weak shorts before they bring it down again if they're going to bring it down. So you got to, you know, you just got to try to, and here you got the short-term CCI. Look at it, turning up. All right. This is flattening out here. All right. This is going from red to gray, and it crossed the center line here. So if you were short, this would have been a good tool to get yourself out right there. All right. Like I said, Pat has tried to make this idiot-proof. All right. And then, and we got all these single prints up to here. Then, you know, from the opening. I mean, we kind of sold off from the opening. So it's something you got to keep in mind. So the second rotation. So you know, there's a lot of you guys have asked me questions. I'll make a chart here out of here for you. And the software really does it for me. I just go to, let me make a F5 chart. It'll open up here. Okay. And then I got to go to a 5-minute chart. I think I showed this last time. Inside Edge Software, great guy. Charlie Cochran, one of the first guys to use volume profile. All right. And Peter Nanis, awesome guys to deal with. So I go to here, and I go to miscellaneous, calculate rotation statistics, and this gives it to me right here. 12 ticks. All right. So what is that? 12. Was that 4 times 12 or divided by? Sorry. Hold on. I'll get this for a second. So that's 12 ticks is the average rotation. So about 300 points. 300 points. So, you know, like I said, looking for that 96 area. All right. And it's just, you know, it's just math. And I think all these drones are using math here. Let's bring this guy back in here. Right. They got orders from 95 up to 97. Okay. Any questions?
Any of these studies you suggest for trading indices, SPY, DIA, things like that?
All these studies are price-based, so they work on anything. I mean, they work on, you know, now profile, you got to be able to get the volume figures, all right? But all these studies, we overlay this on every market, gold, bonds, oil, everything. This overlay goes on every market, but we have settings. We have different settings that we have to tweak for the markets based on their. What we do is we look at a 5-year history on the way the market rotates and moves, highs and lows, and then there's different settings that we put in for the different markets. So here again, here's this pattern that you love to see. 1, 2, 3, 4, 5, 6. Okay. Moving up, we're at 5 1/4 right now. So that breakout from here was, you know, a good place to get long if you were going to get long, okay? Or if you were short, that was a good place to stop and then look for your next trade. So those are the things that you try to take advantage of. Here's the 5-minute pivot. Let's take a look. NASDAQ took out its 5-minute pivot. Russell took out the 5-minute pivot. The Dow is at 18,105. 18,105 is their 5-minute pivot. Here we go, right here. Okay. Now, how does the 5-minute pivot work? So now we just had a 10:20 close, right? So now we're working our next 5-minute bar with these charts. Okay. Now, you've had this going up. You got the long term turning with a green tip here, okay, and going sideways, okay. So, before, these are the kind of things that will keep you either out of the market or out of trouble, right? So we're back inside the opening range, right? The purple lines for us is the opening range. So we're back inside basically neutral and looking for the market, until it gives us a sign of a turnaround, right? So let's see what happened here. All right. So they're working about 1,200 contracts at 2096. All right. And our orders all up to 2097. 300 points or 600 points from the low would be, what's that low? What is that? 85 and a quarter, right? Right around 90, right around here, right? Let me see. What do we got? Is that the low? 300 points. Low. 2085 point quarter. So 2091. So we're working on our third rotation. I'm sorry, our third rotation, which would be. Remember, I told you the 94 and a quarter. And I tell you that the markets like to move in 3 rotations. Now that we have this, and here's the other thing that will affect rotation, okay? Because I don't want to sound like a nitwit here. When we're in a period of where the volatility has contracted, right? So if you get in a period where the volatility is starting to expand, that's when the rotations will change. So like a month ago, the 5-minute rotation, when we're having 3,000 point days, so it's calculated over the average of 30 days, over the last 30 days. So a month ago, our volatility was what, 3,000 points a day. We were having those big, huge days. And, already today we're 10 points down, and we rallied off the bottom. But what I'm saying is, these rotations are good, and then as the volatility expands, then the rotations expand. So they're a good gauge to give you good places for either entry or stopping yourself out or whatever. So I'm just, now we're seeing a little rounding action here at the top of the CCI. So, we'll see what happens up here.
We just put on a really good link from the February 26th live show where you explain rotation in depth.
Okay.
So check that out.
Thank you, Anthony.
Ready for a question?
Go ahead.
How do you trade? Do you usually scale in, scale out? What do you prefer?
Well, of course, you got to have levels, and there's no way that you can't be a scale in, scale out, because it's very rare you put an order in and it's the exact high or exact low. So you kind of, there's 2 ways to do it, right? So I drew this box here, this 1-minute time frame box. Remember what we said about markets? They're fractal in nature, right? Come on, what happened here? All right, let me see if I get. All right. So for me, once I had when I had this in here and I identified that, so there's 2 ways to trade, right? You could have been short going into this, or sold this, would have stopped, or right here would have stopped above it, okay? Or you could have waited for the breakout and just bought the breakout with your stop back over here. So that's the way to do it, right? So my recommendation today would be, right now, you got to kind of sit on the sidelines until you see what happens up in this area. Now, if it gets above the opening, all right, now right here, this is yesterday's, I'm sorry, value area, 2105. Will the market try to make a move back to 2105? You take a look at where it came from up here on the 1-minute chart. So those are the kind of things you got to look at where you're gonna run into resistance. Would you scale in there, or are you gonna put stops in areas that you think will be areas that are gonna end up being breakouts and so on. So you can do both ways. I mean, you can't. There's no right way to do it. You just got to make sure you want to get your order entry to the the best possible to maximize your profits. The worst thing for every trader, I don't care what anybody tells you, is how much pain do you sit through when you're putting a trade on. Okay, everybody goes through it. I don't care who they are, unless you're a big fund. Even if you're a big fund manager, when you're putting and you're taking a bet on the market. Everybody wants to put a trade on and let it go its way. So you gotta find a way to put this your trades on that gives you the least amount of pain. I guess that's what I'm trying to tell you. Any more? What do you got?
Can you explain the area where stops are sitting to be run?
Well, I mean, that ends up being a guess, right? Stops, where areas being run. Usually they're, like if you could have looked at this today, right? Didn't I, before this thing started, right? I said, look, we had 1, 2, 3, 4, 5 highs, and then boom. So my experience is telling me that there were a bunch of people selling it in this area, thinking it could be retracing again based on the action for today. And so I picked that area above here on 3 1/4, 3 1/2 that the stops would have been sitting. So, it just kind of makes sense. It's not like rocket scientists. It's common sense. You see all these highs here, and you keep failing there. That's where stops are sitting here. I'm going to bring in. So I'm going to show you something. Here's a 1-minute chart on oil. Okay, this is, if I can go back with this. Let me bring this back. Let me see here. All right. So take a look at this area and just let's pull it back to here. This was yesterday afternoon. Look where it stopped. Okay, right here. Okay. Take a look at this. Okay, look where this stopped. And then the market came down here, stopped again, and then look at this. It went all the way up and made these highs. Look what happened when we got through the top of this today. Look at that. Okay, come on. That's where stops are sitting. Right there. Okay. Look at this. Here's stops. All right. So now the market's consolidating. So if I was a betting man, I would be looking right here on oil and saying, if it gets back above 50.15, the market's going higher. So they're going to get back in here, all right? And it may even be 49.87, this area, right? I'd be looking at that saying, okay, I think that's something I have to be looking at, all right? So, the charts are great. All these things are great. And, when I was in the pit, I used to keep a mental note of this. Who had the big offers, who had the big sells, who had the big bids, and you look, and when the market makes, several highs or several lows, you look for the action that comes back and blows through those, right? So right now, when you get this kind of action, you've had 1, 2, 3, 4, 5 higher closes. Let's see what happens here, okay? We're working on our second lower close, or this might end up being a higher close. You usually get a breath, and then you get another leg up. You usually get a breath and another leg up. Okay, so you got the Nasdaq and the Russell positive. You got the Dow and the S&P. We take a look at everybody. The Dow's down 100. We're still down 11, and the Nasdaq's down 13. Russell's almost unchanged. So, you kind of just got to take a breath and let the market, make up its mind at this point. But right now, the short-term trend is telling us that it's up. All right, until this crosses here again. And this is, remember I told you about the CCI. It goes red to gray. It doesn't go red to green. It goes red to gray. Okay, that doesn't mean that it can't. You got to. You can almost look at this like, well, the market was bound to make. All right. So here, we'll bring the profile back in. All right. It was bound to. We had too many single prints up here. Too many single prints. And what I don't like though is this is still unfinished. Look at this big tail down here. So this may be a day where we start having some expansion of range, right? I mean, we could still rally up into this area, even into value area, and fail and still be, have a market that looks like it can be moving down, right? So bracket E opened up and it just moved straight higher. It had no downticks. Let's go in here and look at this. I'll separate it at bracket E. All right. So bracket E opened here and closed up here. Now bracket F is opening up. I don't know what's going on with my profile right now, but so let's see if bracket F is going to be another push up. Okay, bracket F would be another push up and close in these single gaps, single prints up here. All right, and then the market can make a healthier base and move the other, and move back down here. Okay, that's what I'm looking at. Right now we're in what we call the noise consolidation period of time. That's what we're in. Okay, any other questions?
Can you explain how you're finding the overbought and oversold areas?
Okay, you see this CCI? See how it's gone up above here, rounded up? Anything above these two lines is overbought. Anything below the two red lines is oversold, and this pink line is the center point. So I look for this line to move either down through this center line, okay, all right, and so right now what happened is we had see how that down here way below this, all right, oversold. We have a little bit of retracement here, and then when we crossed here, when we crossed here, right here, see how we crossed? If I take a look at that, that was the bar, I believe. Let me look at that. Let's see right here. Hold on a second. I gotta expand this a little. All right, we crossed right about here. All right, so this is the bar 92 and a quarter, right? So we're getting across 92. We had a little down, and then we're across the CCI, and it kept moving up, and that's how we ended up. Then we ended up taking it out, right? So right now, this is the way it's flattening out, and I still have this on an ascending. It's ascending up, and then this is sort of flattened out. It looks like it's not done to the upside right now. It's not done to the upside. So, unless this moves back down here and crosses the center line again, then, that's what we're looking at. So, this indicator is a great indicator, and like I told you, I'm trying to, they have other indicators that will give you overbought, oversold, but this is ours. We put a bunch of stuff in it that's different. We took a bunch of, we took stuff off the shelf, and then we added our stuff to it. Okay. Let's see if 2098 becomes a target. Here we are going through here. I'm going to show you this too, why it's going on. Okay. Here's how I know that these are good orders, right? They're not getting canceled. Watch these yellow dots get in here and chew them up like Pac-Man used to be, right? There's times where you see, boom, got filled. Right? They're still trying to get up. Let's see what happens when they get to the 5-minute pivot. Right? We got orders sitting up there. This is a great piece of software. I like it because it shows me where the bigger players are sitting, okay? And if it corresponds with the numbers that I am looking at right there. And once again, let me put a disclaimer out there. I do not have any financial arrangement with this. Jim Harrison, good guy. He came to me, asked me to take a look at it, see if I like it. And I've been looking at it for the last 2 months, and I love it. I think it's a great piece of software. It's not, to me, it's another tool to aid me in decisions that I've already made. So it's another tool. It's not the end all and be all, but you know, these guys play games. You know, just like when I was trading in the pit, the bigger traders, we all played games. When I wanted to sell the market, I used to give my orders to the guys standing on the top step filling orders, and I would bid the market up into my orders. These guys do the same thing. They do the same thing. Except back then you couldn't buy your own orders. Now these guys get away with buying their own orders, which is, I don't know how the Merck allows that. What do they care, right? More commissions. So.
Yeah, good question here.
Go ahead.
If only 5% of traders are successful, what are the 2 top reasons the 5% succeed and the top reasons the 95% lose?
Is it 5? I used to tell people when I went to the trade shows that if there's 1,000 people in the room, 200 people will be successful, and out of those 200 people, 20% of them will make 80% of the money. So those 40 guys will make 80% of the money. So I think it has to do with, you know, I've said this before. How do you deal with risk, stress? How do you deal with your decision-making process? You know, I had a lot of people used to contact me and say, listen, when I go to Vegas and when I lay it in, you know, when I get there and I got their money, I know how to lay it in. And I'm like, okay, that has nothing to do with what I do, okay? What we do is educated, you know, I'll tell you the best guys that I used to recruit when they were kids, athletes, because they were already mentally and physically disciplined to stay with a plan, okay? And guess what? They didn't falter. Some did. The ones that were more, you know, that, you know, were, you know, mentally, not as mentally strong as the other ones, would falter because they didn't like dealing with adversity. So it's hard to, you know, certain personality types are better than this. You know, one of the things that used to happen is that I used to put young kids in, used to have them there for a year, and then I used to look at them and go, all right, it's time to start trading. And then the worst thing that could happen is a guy come out and in his first 5 trades, he knocked it dead, right? And he was all full of himself. And then the next thing I knew, he broke the rules that we set up for him, and he lost everything and more, right? Because he thought he was invincible. Because one thing about this market, you're never going to conquer it. And you got to be able to be flexible and be able to, the successful traders can come back from a losing day. They come back from a losing day. And one of my rules is, thou shall not shoot the whole wad. If you shoot the whole wad, you're done. You're out of the business. You're out of the game. You know? So it's the guys that can deal with the risk and stay disciplined. I don't care what anybody tells you. This whole game is about being disciplined, staying with your plan, and don't look at money on the dome. You got to look at, this was my entry point. This is my stop. This is where I think the market's going, and stay with the plan, okay? Another thing I used to tell people, you know how to turn a day trader into a position trader? Let the market go against them. I was giving a speech out in California, and this was years ago, and the height of the day trading frenzy in the late 90s with a lot of people trading stocks. And I'm in California, and I'm giving this talk, and I can see this Oriental guy just fixated on every word, and I'm talking about, you know, how do you deal with losses? How do you come back? And the guy came up to me with tears in his eyes afterwards. He goes, I made $35 million. I go, really? I go, what did you do? He goes, I was a hairdresser. So from like 96 to 97, every time the market dipped, he kept buying it and buying it and buying it. And then it was like 2000, he got crushed. He gave all the money back. And you know, he was hugging me after the talk. So, you know, it's how do you deal with your losses? I mean, I'm ranting and on about this, but I can't tell you. There's nobody out there. Look, do your homework every night. Try to find the things that aid you in your decision-making process, and stick to the plan. And if you can't do that, I said it last week, right? It's like having a job, working all week, putting in 40 hours, maybe 60 hours with all your preparation, and at the end of the week you lose money. It's like having a job and your boss telling you at the end of the week, oh, you worked 60 hours, you worked great, you did a good job, you really worked hard, you owe me $3,000. That's what trading's like. So
Just tweeted out the link to our blog too, 10 Rules of Trading.
okay, so we're looking right here. Let me see. So the Dow and the S&Ps are still haven't taken out their 5-minute pivot. They're just sitting here, and they're actually, where we at? We're almost like, I think the opening print for S&Ps today was, let me look at the opening print. Opening print was 2098.75, so we're just below the opening print. Okay. It's typical. This is typical. Look at bracket F. Bracket F. No downticks. Went straight up. All right. We're into we're going to be entering into the second part of it. Okay. Okay. So here we are with bracket F. I think they're going to try to fill in up here, and then it'll be the afternoon that they'll come back and try to take it down again. I mean, they're never going to. They never let you get what you want right from the beginning. That's the trouble with this game, right? Any other questions? And so here's another thing that's, I kind of think the market's just taking a breath, right? This thing is not turning down. It's kind of staying right about the over bought line. It went up and came down. Then it didn't start, it's still flattening out. And see this here? These two are getting ready to cross. We'll see what happens if they cross, okay? This is why I've been, looking at these here, it's really will keep you out of trouble. It's really, they're a great tool. Here's the 1-minute cash. Try to retreat it a little bit. Now, who asked me about stops? Right? So this is telling me, if we get above this, the 97, possibly there's stops up there. Are there big guys sitting up here? There's about 3,000 contracts between 98 and 98.5. These guys have been here for a while. Watch this here. I got a sense that these will disappear. It looks like these guys are trying to goose the market to get some sells off. Okay, 50, look at that, gone. Okay. When they're legit, that white line stays there until they're all gone. See that?
Just tweeted out the link to Bookmap too. If
Okay.
you want to check that out.
At least we had a little more action today, a little more, the market kind of materialized why we were trading here and looking at these things the way I thought it would. So let's see what happens if we could take out the 5-minute pivot. Remember, I always want these markets. All right, I want to show you something here, right? Here's oil. It's back inside of here. This is where everything started. Consolidation in this area. Okay. Here's that oil, that 1 minute oil chart. This is where everything started. Now, we have a positive bias on oil. Positive bias on oil. So, two things happened in oil today, right? You had a Saudi minister come out and say, man, I don't know what they call themselves. I don't care. I actually don't care what they call themselves. At the end of the day, they came out and said, we're going to keep producing as much oil as long as people are buying it. Well, everybody knows there's about a 2 million barrel excess of oil right now a day, and they're going to keep printing it. They're going to keep producing it. Printing, we print money, we produce oil. Anyway, and there was a report coming out today, and so they used that. You know, the people in the know knew the report was coming out. They shorted it up here and they covered it down here. So, you know, you can't convince me of any different. But so, getting back to this, with an up bias where we opened up here today, and we take this area out again, and plus, take a look at the oil. Take a look at this profile. Look at this. Look at all these single prints. I'm sorry. Look at this, all the way back up to here. So I would be looking for a spot if you're gonna get in oil, right? And I would be looking for a spot to get long. And if this is the spot on the breakout above here at 50.13, and then put a stop down here at 49.87, at least you know what your risk is at. You know where it's at, and you're making a pretty good educated guess that the market could retrace all the way back to where that break started from, right? From right here, like 50.58. And that's the way markets trade. I mean, it is what it is. It's not, you know, I'm not a rocket scientist. I just look at patterns and they beat each other. All right, how are we doing over here? Let me see here. See, every time I move these charts around, I screw myself up. All right. So we're still in a consolidation here, right? Let's see what those, if these end up crossing or they just meet each other. Moved a little lower here. Got any more questions?
They want a story. Story time.
Story time. Did I tell the story about Ivan Bolsky yet? I told it this morning.
I don't think so.
No?
I don't think so.
All right.
You want to see your face too.
Want to see my face? Okay. All right. All right, I'm going back to... All right, thanks, Anthony. There we go. All right, so I'm going to tell you a story about... I used to fill orders for... you know, before 1986, I was what you call a dual trader. So I had a deck that I filled orders for on the... I'm going to keep my hands down. There you go, Debbie. See that? I look like a nice, prim and proper boy who went to Catholic school. And I didn't move my hands because the nuns used to whack it with a ruler. Yes, that's what they used to do, whack it with a ruler back then. St. Pius X. Sister Regina Marie. Oh, my God, that she used to beat me up. Oh, my God. And for no reason. There was nothing wrong with me. Nothing. I was absolutely the nicest kid you ever wanted to meet. So anyway, that's not true. My mother would go visit people with me and my brother, or my brother and I, and they would pretend like they weren't home. They would shut their drapes because we were a little bit wild. So anyway, I'm filling orders, and I get an order to sell 4,000 S&Ps on a Friday afternoon. And on Monday, the market opens up, the limit down, and then I get an order to buy the 4,000 back. So never thought about it. But then 10 years later, I was sitting in New York at a benefit, and I'll leave names out of this, but I used to fill for Salomon Brothers. And the benefit was one of the partners of Salomon Brothers. And I asked him about that order, and he said, yeah, he goes, that was Ivan Bolsky's order. He put the order in, he knew he was getting arrested. The market opened limit down, he made his, 15 or 20 million on it, and he paid his fine with that. So remember, I said this last week, if you want to make money every day in the market, have somebody tell you where the orders are before they go in, right? And then, I said it also that show me a guy who makes money every day, and I'll show you a guy who's going to get indicted. So don't get discouraged. This is a process, and you got to be able to live with it. You got to be able to live with the ups and the downs. And you asked me that, so I jumped around on it. There's so many guys that I thought were going to be great traders because they were so smart, they were achievers, and the problem was they couldn't deal with the losing trades. They couldn't deal with the fact that they were wrong, right? And the accounting type and things like that. Even my partner Pat, he's an engineer. He needs 2 to 2 to be 4 all the time. So he's always looking for the best system. And he has a great idea of market concepts, but he trusts the computer more than his instincts ever. So he's a great back tester and looks at products and stuff like that. And then there were guys that I didn't think would be good traders, and they were very good because they were very disciplined. They stayed to the plan, and then they didn't deviate from that, and they didn't mind losses. They were able to come back from the losses. So I think that's the key. How do you deal with losses? So that's about it I have for today. Any more questions there, Ian?
Covered everything.
Well, I've covered everything. I hope this is helpful. At least if you take a look. Let me share this one more time. All right, so we're getting a little bit of a pullback here, right? We've crossed the center line here. These two have not really met with one another. Here now we're at the bottom here, the bottom of the range. We had this, even the 1 minute. So, we take a look at this, like I said, when you take a look at this chart, the 1 minute chart, it should represent what the 5 minute chart look. They should look alike, They're fractal in nature. So we're in a consolidation here until the market decides what it wants to do. And now we're in a choppy period where you've got the NASDAQ and the Russell positive, and they're selling has slowed down, and the S&P and the Dow have rallied back, but they still haven't taken out the 5 minute pivots.
I want to remind everybody that we put out all the market research on our blog and our website, Man Over Market.
Right. So what I do now is that the stuff that the things that I cover in the morning meeting, like on the YouTube video, the written version of the S&Ps is on the blog now, and we put a link to that. It says ES Morning Call. So it goes into a little more in depth of the things that we're doing. Taking a look at market, different things you should look at ES, and we're going to change the website around where we're going to have some static pages, get rid of the pop-up window, and have the static pages allow you to go back to get the research. So that's what we're doing with that. So when you see that link, go back to it, and you can access the information. Any other questions? Let me ask you guys questions. How many of you are trading full-time, or this is part-time? If you're full-time, just let us know. All right, and that's another thing. This is a hard game to conquer if you're doing this part-time. It takes 100% of your concentration. It's really hard to do this full-time or part-time. And the other thing is, I've said this over and over. If there was a holy grail out there, nobody would give it away for free, and nobody would sell it for any amount of money unless it was, $500 million. And the problem with trading is that you're only as good as your last trade, right? You can't walk into Goldman Sachs and show them your P&L and say, look at this, I haven't had a losing trade in 2 days, 2 years, 3 years, and say, I'll show you how I do this. Right? It's just a difficult business.
About 50-50 right now, part-time, full-time, guys.
50-50? Okay. All right. So you part-time guys, if you're, this is a hard game, and so that means you're probably doing some putting on trades, putting stops on, and checking it at lunchtime, right, and so on. So it's a hard. It's just very. It's if you don't watch the markets and the way they move. Like I said, I thought I have an advantage because of all the years I spent trading in the pit and the way markets move. That gives me an advantage, and all I have to do is make a mental association from the pit to the screen, because they're still trading the same. They're not trading any different than they traded back then. They're still trading the same. They're just some of them have more volume now, and there's more volatility, more volatility. Like the S&Ps had tremendous amount of volatility, and then it went through like 7 years. There was no volatility in the stock market, right? And now the volatility is back. So, and this is why I like to see corrections, because there's a lot of when the market corrects, you get more people that want to be in the market. Very few retail people, or and this is the other difference between retail and professionals, right? If you tell a retail person, I think the market is up at 21.30, 21.25, or whatever that, 21.18. I think there's a strategy. You can sell the index up here and buy it back at like 20.82. They would tell you, well, let me wait till you get to 20.82 and then I'll buy it, because that was one of the hardest concepts that I had to deal with when I first started trading. How do you sell something you don't own? That was really difficult, and and then what happens is there's this metamorphosis that most professional traders go through, and that is a lot of them only want to trade from the short side because they believe markets go down faster than they go up, and I don't think that's true. You guys have seen short covering rallies, so. Yeah, panic does happen on the, I traded in the 87 crash. I traded in 2000. I traded through a lot of 9/11. So, markets do go down, but they can go up just as fast, especially the short covering rallies. Those are brutal. Any other questions?
Looks like we failed to move above opening range. Does the profile need to spend a little time up there filling in?
I think so. I think that I can't find my profile where it went. Let me see. Let me see if I can find it again. There we go. I look at this. Then like I said, I think the market could, possibly test, the bottom of, the bottom of value up here in this area. Right now, it's kind of sideways. But when I look at this, and I look down here, and I'm looking at this, especially this is what's concerning me, is that this doesn't look finished to me. Now, if on a day that if this was normal and we had the volatility we had a month and a half ago, I wouldn't be concerned. I would be thinking, all right, they're going to take this out in the afternoon. But right now, I don't want to be involved until until we. I mean, it's the same thing as I showed you in that oil, right? This tell me I want to wait until I get some sort of confirmation. Maybe I move back in here, then you got a shot at taking out the lows. So right now you're sitting up here in the opening range, and this is, I want to call like the sort of the consolidation area for the bottom of the range right here. So
a couple guys want to come to Chicago and hang with you. Maybe have some coffee.
When?
What do you think about that?
You guys come here and we'll go to dinner, and we'll go downtown to, how old are you guys? Hang out. We could go to there's some restaurants, what we call the Viagra Triangle. The Viagra Triangle down in Chicago. All right? So all the guys are our age and all the girls are in their 20s. No, it's called the Viagra Triangle. Gibson's, what else is there, Anthony? Gibson's, what's the one of Tavern on Rush, Carmine's. This is my stomping grounds for a long time. I didn't get married till I was 30 years old, so I used to call myself Downtown Brown. Downtown Brown. That was me. Yeah. Anytime. Look, it's the end of the hour, and Deb, why don't you sign off? Thanks again. Anything we can do to help you, we're here for you. Thank you.